Given the price history and forecast for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The recent price action shows a period of consolidation followed by a slight upward trend. The forecast suggests a potential pullback in the coming week, presenting a buying opportunity. Therefore, a long position is recommended with an entry price around $98,000. A stop-loss order should be placed at $97,500 to minimize potential losses. The target price is set at $101,000, aiming to capitalize on the predicted upward momentum. This strategy takes advantage of the short-term price fluctuations while minimizing risk through a well-defined stop-loss order. Based on the provided price history and forecast for Bitcoin Cash, a cautious short-term investment strategy is recommended. The historical price data reveals a downtrend over the past 2 weeks, with the forecast predicting further declines. The current price is close to the support level of $440.1, indicating potential for further downside movement. Therefore, a short position on Bitcoin Cash is suggested. An entry price of $460, slightly above the current price, allows for a small margin of safety while still capitalizing on the anticipated downward trend. The stop loss should be set at $472, the first level of resistance, to limit potential losses if the price unexpectedly rebounds. The target price is set at $430, a conservative level that aims to capture a portion of the projected decline while avoiding excessive risk. This strategy allows for a relatively quick entry and exit, capitalizing on the short-term price movement while minimizing exposure to potential long-term volatility. Based on the provided stacks price information, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a downward trend, with the forecast indicating further declines. While the support price sits at $1.573, the forecast suggests the price could drop to as low as $1.54 within the next week. Therefore, a short position is recommended. An entry price of $1.80, slightly above the current price and close to the resistance level, would allow for potential profit as the price moves towards the forecast lows. A stop loss at $1.88 would limit potential losses if the price unexpectedly rises. The target price should be set at $1.60, capturing a significant portion of the anticipated decline while staying above the support level. This strategy aims to capitalize on the short-term bearish outlook for stacks while managing risk effectively. Given the current price trends and forecast for Ethereum, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile pattern with recent declines, and the forecast indicates further potential for drops. While the support price at $3,410.67 provides a potential floor, the resistance at $3,628.50 suggests limited upward momentum. Therefore, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve an entry price around $3,600, aligning with the resistance level and the potential for a price reversal. The stop loss should be set at $3,680 to mitigate potential losses if the price unexpectedly rises. The target price could be set at $3,400, aiming to capture a significant portion of the projected decline while staying above the support level. This strategy aims to profit from the short-term bearish momentum while minimizing risk through a well-defined stop loss. Given the Ripple price history and the provided forecast, a cautious medium-term investment strategy appears most suitable. While the historical data shows some volatility, the price has generally trended upwards. However, the forecast indicates a slight downward trend in the coming week, suggesting a potential consolidation phase. Considering this, entering a long position at the current price is not advisable due to the risk of a short-term dip. Instead, a more prudent approach would be to wait for a price pullback towards the support level of $2.2488. This would provide a better entry point for a long position, allowing you to buy at a potentially discounted price with a lower risk. A stop-loss order could be placed just below the support level at $2.22 to minimize potential losses. The target price could be set at the resistance level of $2.5722, aiming for a moderate gain as the price potentially rebounds. This strategy allows for a balanced approach, mitigating risk while still capitalizing on the potential for upward movement in the medium term. Based on the provided price history and forecast for Binance Coin, a cautious medium-term investment strategy appears most suitable. The historical price data shows volatility with a general downward trend over the past 2 weeks. The forecast suggests this downward trend may continue, with prices potentially falling to around $675 in the coming week. However, the support price at $666.72 indicates a potential floor for the price, suggesting a possible rebound. Therefore, a long position is recommended with an entry price around $675. This allows for potential upside if the price rebounds towards the resistance level of $720.95. The stop loss should be set at $667 to limit potential losses if the price continues to decline. The target price could be set at $700, offering a reasonable profit margin while staying within the projected price range. This strategy aims to capitalize on a potential rebound while mitigating risk by setting a stop loss and targeting a realistic profit level. Based on the provided price information for Stellar, a cautious investment strategy is recommended. The historical price data reveals a volatile trend with periods of both upward and downward movement. The forecast suggests a potential decline in the coming weeks, reaching as low as $0.396. Considering the recent price fluctuations and the bearish forecast, a short position appears to be a more suitable approach at this time. To execute this strategy, an entry price of $0.425 could be considered, aligning with the recent price action and providing a buffer above the immediate support level. A stop-loss order should be placed at $0.435 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.396, aligning with the lowest projected price in the forecast, allowing for a potential profit while managing risk. This strategy prioritizes risk management and capital preservation over aggressive returns in light of the current market conditions. Given the current price trends and forecast for Toncoin, a cautious short-term investment strategy appears most suitable. The historical price data shows a downward trend over the past 2 weeks, and the forecast predicts further declines. While the support price at $5.214 might provide a temporary floor, the resistance level at $6.40 suggests limited upside potential. Therefore, I recommend a short position on Toncoin. An aggressive entry point could be around $5.82, aligning with the recent price action and allowing for potential profit as the price moves towards the forecasted lows. To manage risk, a stop-loss order should be placed at $5.94, slightly above the entry price, to limit potential losses. The target price could be set at $5.21, aiming to capture a significant portion of the anticipated decline while staying mindful of the support level. This strategy prioritizes risk management and capitalizes on the prevailing bearish sentiment in the short term. Given the price trends and forecast for Cardano, a cautious investment strategy would focus on a short-term approach. While the historical prices show some fluctuation, the forecast indicates a downward trend, suggesting potential for short-term profit. The current price is relatively close to the support price, indicating a potential buying opportunity for a short-term position. Therefore, a short-term investment strategy would involve a short position with an entry price around 98 cents, aligning with the forecast and offering a margin of safety above the support price. A stop-loss order could be placed at $1.02 to limit potential losses if the price unexpectedly rises. The target price should be set at 88 cents, aiming to capture a portion of the anticipated decline before the price reaches the support level. This strategy aims to capitalize on the short-term bearish outlook while managing risk through a well-defined stop-loss order. Given the provided price information for Litecoin, a cautious investment strategy focusing on a short-term outlook appears most suitable. The historical price data reveals a fluctuating trend with recent declines, aligning with the downward forecast. The support price of $99.37 acts as a potential floor for Litecoin, while the resistance at $109.75 indicates a significant hurdle for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price near the current price, around $108, would allow you to initiate the trade. Setting a stop loss slightly above the entry price, at approximately $110, would protect against unexpected price surges. The target price should be set around the support level of $99.37, aiming to profit from the anticipated downward movement. This strategy prioritizes risk management and seeks to capitalize on the short-term bearish outlook for Litecoin. Based on the provided price data for Swaycoin, a medium-term investment strategy appears most suitable. The 2-week price history shows a general upward trend, but recent price fluctuations suggest a period of consolidation. The forecast indicates a slight upward trajectory over the next week, with prices potentially reaching around $4.64. This suggests a continuation of the upward trend but with potential for short-term volatility. Therefore, a long position is recommended. An entry price of $4.35, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $4.08, the recent low point, to minimize risk. The target price could be set at $4.79, the recent resistance level, aiming to capitalize on the projected price increase. This strategy balances risk and reward, allowing for potential profit from the medium-term upward trend while mitigating losses in case of a short-term price decline. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The price is currently near its support level of $9.84, suggesting that it might be oversold. However, the resistance level of $11.79 is relatively high, indicating potential difficulty in breaking through. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive entry price could be $11, aligning with the current price and the downward trend. The stop loss should be set at $11.79, the highest resistance level, to protect against any unexpected price surge. The target price could be set at $10, allowing for a reasonable profit margin before reaching the support level. Based on the provided price information for SE, the historical data reveals a downward trend over the past few weeks. The forecast further suggests a continued decline in price over the next week. This bearish outlook indicates that a short position would be the most suitable strategy for capitalizing on the anticipated price drop. An aggressive short-term investment strategy could involve entering a short position at the current price, which is slightly above the support level of $0.4323. The stop loss should be set at $0.473, the recent high, to protect against unexpected price reversals. The target price could be set at $0.389, aligning with the lowest forecasted price, allowing for potential profits before the market potentially finds support at lower levels. This strategy capitalizes on the anticipated downward trend while managing risk through a well-defined stop loss. Based on the provided price information for Ethereum Classic, a cautious investment strategy would be to adopt a short-term position. The historical price data reveals a fluctuating trend, with recent prices hovering around the support level. The forecast suggests a continued downward trajectory, indicating a potential for further price decline. Therefore, a short position would be more suitable for this scenario. A conservative entry price would be around $29, aligning with the forecast and the current price. The stop loss should be set slightly above the entry price, at $30, to limit potential losses. The target price could be set at $26.81, the support level, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management and capital preservation while seeking to capitalize on the projected downward movement of Ethereum Classic. Based on the provided price information for Polygon, the historical price data suggests a downward trend over the past few weeks. The forecast further reinforces this bearish outlook, predicting continued price declines in the coming week. The current price is hovering near the support level of $0.4772, which could potentially act as a temporary floor for the price. However, the strong downward momentum and the forecast pointing towards lower prices indicate a higher probability of a break below the support level. Considering these factors, an investment strategy for Polygon would involve a short position with a medium-term perspective. The entry price could be set at $0.517, slightly above the current price to allow for a small margin of safety. The stop loss should be placed at $0.567, above the recent swing high, to limit potential losses if the price unexpectedly rallies. The target price could be set at $0.454, aligning with the forecast's lowest predicted price, allowing for a decent profit potential while mitigating risk. This strategy capitalizes on the anticipated downward trend in Polygon while managing risk through a well-defined stop loss. Given the provided price history and forecast for AEVO, a short-term bearish investment strategy is recommended. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The price is currently near the resistance level of $0.391, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve opening a short position at the current price, with a stop loss set slightly above the current price to minimize risk. The target price should be set at $0.3278, the support price, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the bearish momentum indicated by the price history and forecast, seeking to profit from the potential downward movement of AEVO in the short term. Given the price trends and forecast for optimism, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests optimism could drop from its current price to as low as $1.77, while the support price sits at $1.577 and resistance at $2.541. This indicates a bearish outlook in the short term. A short position is advisable to capitalize on the anticipated decline in prices. For this short-term investment strategy, an entry price of $2.15 would be ideal, aligning with the forecasted price. The stop loss should be set at $2.25 to protect against any unexpected price recovery. The target price should be set at $1.80, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.577. Given the provided price history and forecast for STRK, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level of $0.4891. The forecast predicts further declines, suggesting a bearish outlook for the short term. However, the price has found support at this level, indicating potential for a temporary rebound. Therefore, a long position with a medium-term horizon is recommended. The entry price should be set slightly above the current support level, around $0.495, allowing for some margin of safety. The stop loss should be placed below the support level at $0.489 to limit potential losses. The target price can be set at $0.6163, the recent resistance level, aiming to capitalize on a potential price reversal and upward momentum. This strategy aims to capitalize on a potential bounce from the support level while acknowledging the bearish short-term trend. Based on the provided information about Solana, the 2-week price change shows a clear downward trend. The forecast also predicts further declines in the coming week. Considering these factors, a short-term bearish strategy appears most suitable. To execute this strategy, we should enter a short position at the current price of $194. The stop loss should be set at $206, slightly above the recent high and the forecasted high, to minimize potential losses from an unexpected price reversal. The target price should be set at $179.43, which represents the identified support price. This approach aims to capitalize on the anticipated price decline while managing risk effectively. Based on the provided price information for Jupiter, a short-term bearish strategy appears to be the most suitable approach. The historical price data shows a consistent downward trend over the past 2 weeks, with the forecast further predicting a decline in the coming week. The price is currently hovering near the support level of $0.8563, suggesting potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current market price, with a stop-loss order placed above the current price to limit potential losses. The target price would be set at $0.819, the lowest projected price in the forecast, allowing for a profit before the market potentially finds support. This strategy capitalizes on the bearish sentiment indicated by both historical data and the price forecast. Given the price trends and forecast for render, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests render could drop from its current price to as low as $7.18, while the support price sits at $7.275 and resistance at $8.032. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $7.78 would be ideal, aligning with the recent price action and the forecasted price. The stop loss should be set at $7.90 to protect against any unexpected price recovery. The target price should be set at $7.20, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $7.275. Based on the provided information for Solana name service, a cautious short-term investment strategy is recommended. The historical price data shows a downward trend over the past few weeks, and the forecast predicts further declines. While the support price at $0.2253 offers a potential floor, the resistance level at $0.3355 suggests limited upside potential in the near term. Considering these factors, a short position appears more suitable to capitalize on the anticipated price drop. An entry price of $0.300 could be considered, aligning with the current price and the downward trend. The stop loss should be placed at $0.315 to protect against any unexpected price surges. The target price could be set at $0.250, aiming to profit from the predicted decline towards the support level. This strategy prioritizes risk management by setting a stop loss and focuses on capturing potential short-term gains within the predicted downward movement of Solana name service. Based on the provided price information for Doge-Coin, a cautious short-term investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines. The current price is hovering near the support level of $0.31581, indicating a potential for further downside movement. Therefore, a short position on Doge-Coin is suggested. An entry price of $0.359, slightly above the current price, would allow for a buffer against immediate price fluctuations. The stop loss should be set at $0.373, aligning with the forecast's highest projected price for the coming week. The target price should be $0.306, a conservative level below the projected lowest price, aiming to capture potential profits before the price potentially bounces off the support level. This strategy allows for a limited exposure to downside risk while aiming to capitalize on the anticipated short-term price decline in Doge-Coin. Given the price trends and forecast for PEPE, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and near the support level. The resistance is at a significantly higher level, indicating that it might be difficult for the price to break through in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An entry price of $0.0000230 would be a good starting point, aligning with the current price and the downward trend. The stop loss should be set at $0.0000247 to protect against any unexpected price recovery. The target price should be set at $0.0000195, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.0000097. This strategy aims to capitalize on the short-term bearish momentum of PEPE. Based on the provided SHIB new price information, a conservative short-term investment strategy appears to be the most suitable approach. The 2-week price change reveals a downward trend, and the forecast indicates further declines. The support price sits at $0.0000192, suggesting a potential floor for the price, while the resistance at $0.0000238 indicates limited upside potential. Considering these factors, a short position could be profitable as the price potentially moves towards the support level. An ideal entry price for this short position would be around $0.0000246, aligning with the first forecast price. The stop loss should be set slightly above the entry price at $0.0000242 to minimize potential losses if the price unexpectedly surges. The target price could be set at $0.0000218, a conservative level that allows for profit-taking before reaching the support price. This strategy aims to capitalize on the anticipated short-term price decline while managing risk effectively. Based on the provided price history and forecast for Dog with Hat, a short-term bearish strategy appears to be the most suitable. The historical price data reveals a consistent downward trend, with the price dropping significantly over the past 2 weeks. This downward momentum is further reinforced by the forecast, which predicts continued declines in the coming week, reaching as low as $1.90. The support price at $2.074 suggests a potential floor for the price, but the significant downward pressure from both the historical data and the forecast indicates that breaking below this support level is a high probability. Therefore, an aggressive short-term investment strategy for Dog with Hat would involve taking a short position at the current market price, aiming to profit from the anticipated decline towards the support level. A stop-loss order should be placed above the current market price to limit potential losses if the price unexpectedly reverses upwards. The target price would be set slightly above the support level, allowing for a reasonable profit margin while minimizing the risk of being caught in a potential bounce back. Based on the provided price information for Doge-Coin, a short-term investment strategy appears most suitable. The historical prices indicate a downward trend, and the forecast predicts further declines. The support price of $0.006277 suggests a potential floor for the price, while the resistance price of $0.007435 indicates a significant hurdle for upward movement. This bearish outlook, coupled with the forecast, suggests that capitalizing on the potential price decline would be a prudent approach. Therefore, a short position on Doge-Coin is recommended. An entry price of $0.00711, aligning with the first forecast price, would be suitable. A stop loss should be placed at $0.007435, the resistance price, to limit potential losses if the price unexpectedly surges. The target price should be set at $0.006277, the support price, allowing for a potential profit from the anticipated price decline. This strategy capitalizes on the short-term bearish outlook for Doge-Coin and aims to generate profits from a potential price drop towards the support level. Given the provided price history, forecast, support, and resistance levels for Near Protocol, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. This bearish outlook suggests that Near Protocol may not be an ideal candidate for a long-term investment at this time. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $6.40, slightly above the current price and near the recent low, would be appropriate. The stop loss should be set at $6.60 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $5.50, aligning with the lowest predicted price in the forecast. This strategy allows for potential profits while mitigating risk by establishing clear entry, stop loss, and target levels. Based on the provided information for Internet Computer, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price change shows a downward trend, and the forecast predicts further declines in the coming week. While the support price at $9.422 offers a potential floor, the historical data suggests a continued downward movement. Therefore, a short position would be recommended to capitalize on this anticipated decline. An entry price of $11 would allow for a profit opportunity as the price moves towards the forecast low of $9.94. A stop loss at $11.791, slightly above the current price and the resistance level, would help mitigate potential losses if the price unexpectedly surges. The target price should be set at $9.60, aiming for a modest profit while staying within the predicted range of decline. Based on the provided injective price information, a cautious investment strategy is recommended. The 2-week price change shows a consistent downward trend, and the forecast indicates further declines in the coming week. While the support price of $20.30 offers a potential floor, the resistance level of $23.12 suggests limited upside potential. Considering these factors, a short position appears more suitable. An entry price around $22.50 would allow you to capitalize on the downward trend while setting a stop loss at $23.12 to minimize potential losses if the price unexpectedly surges. A target price of $20.30 aligns with the support level and offers a reasonable profit margin. This strategy emphasizes risk management and capitalizes on the prevailing bearish sentiment surrounding injective. Based on the provided price history and forecast for BTC, a cautious short-term investment strategy appears prudent. The historical prices exhibit a clear downward trend, with recent lows indicating potential continued downward movement. The forecast further reinforces this bearish outlook, projecting a decline in price over the next week. Considering this trend, a short position on BTC is recommended. An entry price of $500 could be considered, aligning with the forecasted price. A stop-loss order should be placed at $520 to limit potential losses if the price unexpectedly rises. The target price should be set at $450, aiming to capitalize on the anticipated price decline while staying mindful of the support price at $448.60. This strategy allows for potential profit while mitigating risk in a potentially volatile market. Given the provided price information for THETA network, a cautious investment strategy is recommended. The 2-week price change shows a downtrend, with the forecast indicating further declines. The historical price data reveals a consistent downward movement, suggesting a bearish sentiment in the market. The support price at $1.37 indicates a potential floor for the price, while the resistance at $2.376 acts as a significant hurdle for upward movement. Therefore, a short position on THETA network is advisable for a short-term investment perspective. An entry price around $2.15, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $2.30 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.60, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the bearish outlook and aims to profit from the potential price drop towards the support level. Given the 2-week price change and 1-week forecast for WorldCoin, a bearish investment strategy is recommended. The historical price data shows a clear downward trend, with the forecast indicating further declines. The price is currently close to its support level of $2.197, suggesting a potential bounce. However, the forecast suggests a continued downward trajectory, making a short position the most suitable strategy to capitalize on the anticipated price decline. An aggressive short-term investment strategy would involve entering a short position at the current price of $2.42. The stop loss should be set at $2.50, slightly above the current price, to protect against any unexpected upward movement. The target price should be set at $2.10, aligning with the support level and allowing for a potential profit of 13%. This strategy aims to take advantage of the short-term bearish momentum and capitalize on the price decline towards the support level. Given the provided price information for Hooked Protocol, a conservative short-term investment strategy is recommended. The historical price data reveals a consistent downward trend, with the forecast further projecting a decline. While the support price of 41 cents offers a potential floor, the resistance at $0.4376 indicates limited upside potential. Considering these factors, a short position is more suitable to capitalize on the anticipated price decrease. An entry price of 43 cents would allow you to initiate the short position near the resistance level, maximizing potential profit if the price drops. The stop loss should be set at $0.448, the highest recent price, to protect against unexpected upward movements. The target price could be set at 41 cents, aligning with the support level and ensuring a reasonable profit margin. This strategy prioritizes risk management while aiming to capitalize on the prevailing bearish sentiment surrounding Hooked Protocol. Artificial Superintelligence Alliance shows a clear downward trend in its recent price history. The forecast further predicts continued decline over the next week. This bearish outlook, coupled with the price already nearing the support level, suggests a short-term investment strategy focusing on a short position. An entry price of $1.45, slightly below the current price, allows for immediate profit potential. The stop loss should be set at $1.53, above the recent high and current resistance level, to minimize risk in case of an unexpected price surge. The target price is set at $1.35, aligning with the support level and reflecting the potential for further price decline. This strategy aims to capitalize on the anticipated downward momentum of Artificial Superintelligence Alliance within the short term. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Polkadot could drop from its current price to as low as $6.65 in the coming weeks, while the support price sits at $5.992 and resistance at $8.389. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $7.71 would be ideal, aligning with the forecasted price. The stop loss should be set at $8.04 to protect against any unexpected price recovery. The target price should be set at $6.70, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $5.992. Filecoin's recent price history shows a downward trend, with the forecast predicting further declines over the next week. The current price is hovering near the support level of $3.913, indicating potential buying pressure. However, the forecast suggests Filecoin could drop to as low as $4.78, while the resistance is at $6.19. This bearish outlook in the short term makes a short position the most suitable strategy to capitalize on the anticipated decline in prices. Given the price trends and forecast, an aggressive short-term investment strategy would involve entering a short position at $5.66, the current price. The stop loss should be set at $6.19, the resistance level, to protect against any unexpected price surge. The target price should be set at $4.78, aligning with the forecasted lowest price, allowing for potential profits before the market potentially finds support. This strategy aims to capitalize on the anticipated decline in Filecoin's price within the short term. Given the historical price data and the one-week price forecast for Conflux, a short-term investment strategy appears most suitable. The historical prices show a clear downward trend, with the recent price hovering near the support level of $0.1598. The forecast suggests further declines, reaching as low as $0.155 in the coming week. This bearish outlook, coupled with the proximity to the support level, suggests a high probability of a price drop. Therefore, an aggressive short-term strategy would involve taking a short position on Conflux. An entry price of $0.177, slightly above the current price and below the resistance level, would be ideal. A stop-loss order should be placed at $0.189 to limit potential losses if the price unexpectedly rises. The target price would be set at $0.159, aiming to capitalize on the predicted price decline towards the support level. This strategy allows for potential profit while mitigating risk by setting a clear stop-loss. Based on the provided data for Ethereum name service, a short-term investment strategy appears to be the most suitable approach. The 2-week price history shows some volatility, but the forecast indicates a slight downward trend over the next week. The current price sits near the resistance level of $39.75, suggesting a potential for a pullback. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price of $39.50 would allow for entering the short position at a price close to the resistance level. The stop loss should be set at $40.50 to limit potential losses if the price unexpectedly rises. The target price can be set at $36.50, aiming to profit from the forecast's downward movement while staying above the support price of $36.30. This strategy leverages the short-term price trend and forecast for Ethereum name service, aiming to generate returns within a relatively short timeframe. Given the 2-week price change and the 1-week forecast for Avalanche, a cautious short-term investment strategy is recommended. The historical prices show a downward trend, with the forecast indicating further declines. The price is currently near the resistance level of $44.63, suggesting a potential for a pullback. A short position is therefore advisable to capitalize on this anticipated decline. An entry price of $44 aligns with the resistance level and the forecasted price, allowing you to enter the trade as the price potentially starts to decline. The stop loss should be set at $45 to protect against any unexpected price surges. The target price should be set at $38, which is below the support price of $35.47, allowing you to take profits before the price potentially finds support. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Given the historical price data for Vecane and its forecast, a cautious investment strategy with a medium-term perspective seems most appropriate. The recent price history shows volatility, with a downward trend in the past 2 weeks. The forecast also suggests further declines in the coming week. Considering this bearish outlook, a short position on Vecane could be considered. An entry price around $0.0568, aligning with the recent price action and slightly above the support level, could be a good starting point. A stop-loss order placed at $0.0586, slightly above the entry price, would help mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.0479, aligning with the predicted low point in the forecast, allowing for potential profit capture before the price potentially reaches the support level. This strategy allows for a medium-term investment horizon, allowing for potential price recovery while managing risk through a well-defined stop-loss order. The historical price of PENDLE shows a volatile trend with both upward and downward movements. The 2-week price change demonstrates a downward trend, and the forecast suggests a continuation of this decline in the coming week. Considering the bearish outlook and the forecast price, a short-term investment strategy focused on a short position appears most suitable. An entry price of $5.72, aligning with the lowest forecasted price, would be ideal for this strategy. The stop loss should be set at $5.89, slightly above the current price, to protect against any unexpected price surges. The target price should be set at $5.41, slightly above the support price, allowing for potential profit before reaching the major support level. This strategy capitalizes on the anticipated decline in PENDLE's price while managing risk through a well-defined stop loss. Based on the provided The Sandbox price history and forecast, a cautious investment strategy focusing on the short term appears to be the most prudent approach. The historical price data reveals a downtrend, with the price dropping significantly from $0.917 to $0.552. While the forecast predicts a slight recovery, the overall trend remains bearish. This suggests that a short position could be profitable in the short term. Therefore, a suitable strategy would involve entering a short position at the current price of around 61 cents. The stop loss should be set at $0.681, the highest point in the recent price range, to limit potential losses. The target price could be set at $0.552, the recent low, aiming to capture a significant portion of the potential downside. This strategy leverages the bearish sentiment and aims to capitalize on the anticipated price decline in the short term. Remember, this is a speculative investment, and it is crucial to carefully manage risk and consider your individual investment goals and risk tolerance. Based on the provided price history and forecast for Decentraland, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The current price is close to the resistance level of $0.5921, suggesting potential for a pullback. Therefore, an aggressive short-term investment strategy would involve opening a short position at the entry price of $0.585, with a stop loss set at $0.595 to limit potential losses if the price unexpectedly rises. The target price should be set at 52 cents, aligning with the forecast's lowest predicted price, allowing for profit taking before reaching the support level of $0.485. This strategy capitalizes on the anticipated price decline while managing risk through a defined stop loss. The provided historical price data for ENG coin suggests a volatile period with both upward and downward movements. While the recent price trend shows a decline, the forecast indicates a potential for further drops, reaching as low as $0.227 in the next week. Considering this bearish outlook and the support price at $0.222, a short-term investment strategy focused on a short position appears to be more suitable. To capitalize on this potential decline, an entry price of $0.275 could be considered, aligning with the current price and the resistance level. A stop loss should be set at $0.293 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.246, taking advantage of the forecasted price drop while leaving room for potential price fluctuations. This strategy allows for a potentially profitable short-term investment while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Uniswap, a conservative investment strategy would focus on a medium-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The support price is at $12.784, and the resistance is at $15.233. This suggests a bearish outlook in the medium term. A short position is advisable to capitalize on the anticipated decline in prices. For a medium-term investment strategy, an entry price of $14 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $15 to protect against any unexpected price recovery. The target price should be set at $12, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Based on the provided information for Chainlink, a short-term investment strategy appears most suitable. The historical price data shows volatility, with recent fluctuations around the $24 to $29 range. While the forecast predicts a slight downward trend, the price remains relatively close to its support level of $22.90. This suggests potential for a temporary rebound before continuing its downward trajectory. Therefore, a long position could be considered for a short-term investment, aiming to capitalize on this potential rebound. An entry price around $24 could be reasonable, allowing for a buffer below the current market price. The stop loss should be set at $22.90, aligning with the support level to limit potential losses. The target price could be set at $26.33, the resistance level, aiming to capture a potential upward movement before the predicted downward trend resumes. This strategy leverages the short-term volatility of Chainlink while managing risk through a well-defined stop loss. Based on the provided price information for Aave, a medium-term investment strategy appears most suitable. While the historical price data shows a generally upward trend, the recent 2-week price change indicates some consolidation. The forecast suggests a slight decline in the short term, but with a potential for recovery and further growth in the medium term. This scenario aligns with a medium-term investment perspective, allowing time for the market to stabilize and for the potential upward trend to resume. Considering this, a long position is recommended. An entry price around $325 could be considered, aligning with the recent price consolidation and providing a margin of safety below the current price. The stop loss should be set at $315 to protect against any unexpected price drops, while the target price could be set at $370, capitalizing on the potential for a medium-term price increase towards the resistance level. This strategy allows for potential profits while mitigating risk through a well-defined stop loss and a realistic target price based on the forecast and historical price data. Based on the provided price information for EOS, a bearish short-term investment strategy appears most suitable. The historical price data reveals a consistent downward trend, with the recent price hovering near the support level. The forecast further reinforces this bearish outlook, predicting a continued decline in price over the next week. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, with a stop loss set slightly above the recent high of $1.10 to protect against potential unexpected rallies. The target price should be set at 90 cents, aligning with the lowest predicted price in the forecast, allowing for profit taking before the market potentially finds support. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss. Given the recent price trends and the Tron forecast, a cautious investment strategy would focus on a short-term approach. While the historical prices show some volatility, the forecast indicates a downward trend in the coming week, with potential for Tron to fall from its current price. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at the current price of around $0.258. The stop loss should be set at $0.2977, the resistance level, to protect against any unexpected price surges. The target price should be set at $0.1942, the support price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated downward movement of Tron in the coming week, while managing risk through a well-defined stop loss. Based on the provided Suncoin price history and forecast, a cautious short-term investment strategy appears most suitable. The recent 2-week price change shows a downward trend, and the forecast suggests further declines. Although the support price sits at $0.02122, the forecast predicts prices could drop below this level, indicating a high probability of continued downward pressure. Given this bearish outlook, a short position is recommended to capitalize on the anticipated price decline. An entry price of $0.0235, slightly above the current price and below the resistance level, would allow for a quick entry point. The stop loss should be set at $0.02434, the resistance level, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.02122, aligning with the support price, to ensure capturing potential profits before the price potentially finds a floor. This strategy prioritizes risk management while aiming to profit from the anticipated downward movement in Suncoin's price.